you know, um, basically, like I'm going to be putting Romy on the spot, asking him questions, and it's not right or wrong, or whatever, but more a matter of like trying to grow. And I feel like when you participate, you're able to learn quicker. So, based on this information, Romy, I don't want to give too much away, but actually, I'm not going to do what I was about to do. But you'll remember last night when we were live, this trade played out, right? And we were talking about that. This was our, breaking through this level, coming back, retesting it, enter long, and play it up to the previous day POC. I kind of had a feeling that they might tap the previous day value area high, which would have been just an insane trade if I did that. 158 points. But based on this screen, so again, you know that this took place during our session last night. So basically from here forward, there's two setups that I see that look really good. Where do you think the entries are based on the information that you have on the screen right now? And again, from this point forward, like not this. I mean, you can use the information back here, but I'm looking for trades from here forward. There's two setups that I see that I really like. One is 1,000 times better than the other one, and I'll explain why. But both of them are good in their own way.
Okay, so
And if you need me to zoom in or anything like that, just tell me. Like if you want me to get a closer picture zoomed in.
yeah, I think it's going to be right. It's going to be at. It's kind of my screen's a little blurry. So there we go. So it's going to be. Um, 3 o'clock. Three. Right on the. Yeah, right around there.
Me to zoom in for you.
Yeah.
Here.
So you're getting. Oh, okay. So you're getting support, breakthrough, support.
Here, let me zoom
Mm,
back out because
yeah, it doesn't look that great.
let me make it a little bit easier for you from
Okay.
like here forward. So from
Okay.
here going forward, there's two setups that I like. What do you see?
I don't know. You got to walk me through this a little bit. I'm just
Okay, no worries. Um, right here, we broke this, right? Well, actually, technically, here we broke. Here we retested, right? And then sold off. And then if we go forward, excuse
okay.
me, this is the retest of our previous day value area high, right? So now the next trade is forward from here. Do you see it?
So you would consider that right there a retest
Way over here,
from
yeah.
right here. So you're going
It's technically the second retest, but I would still take it. Yeah.
okay. So you're going resistance. You're going to go short on this.
Yes.
Okay.
What's the next trade? Do you see it?
Would be so we go short on this, and then right here at 5,200, there's another. Are you down here, huh? Yeah, that's right where. That's where I was looking right there, right around 840 at about. I can't draw anything, so.
Okay, I'm actually good with this. This is actually, you tell me why. So you're looking at this. It might be hard for you to see, so I'll. This here is an SR flip, right? So we have resistance. Resistance, broken above, whatever, blah, blah, blah. Becomes support, support, broken back through, becomes resistance. So this would be a short.
Okay.
But I guess what I was getting at is based on the lines that we have on the chart, where would the next trade be?
After that resistance?
Yeah.
This.
What's up?
So past that setup, the below
Yeah.
below down by around 51:45.
This here.
Yeah. You're getting
Yeah.
getting resistance.
Okay, perfect. This is kind of easy. If you're shorting from here, what would you target?
What would be my target?
To close the trade. I'll save you. You're just going to target like your next key level, right? So previous day POC. If you want to be fancy, you could target the previous day value low.
Okay.
So from here, what do you think your next target is? And then you have information here, right? So I'll kind of make it a little bit easier. Is this a strong low or a poor low?
It looks like a strong low.
Agree. Okay. And for the people just listening, I'm going to get into what all of this means in a minute. I just wanted to go through like the best trade setups that I saw for this current chart. And then this here, is this going to be a poor low or a strong low?
Looks like a poor low.
Yes. So if we're shorting here, are we expecting price to bounce before we get to this level? Or are we expecting it to break through?
So on the poor, breakthrough.
Perfect. So we know this is a strong low, right? So knowing that, we probably don't want to target this, right? The 2024 value really low. Sorry, everybody. My wife will be here in a split second. And then, is this a strong low or a poor low?
That's a strong low.
Okay. Is this a strong low or a poor low?
Strong low.
Yes. Strong low or poor low?
Strong low.
Okay. So, based on that information, where do you think we should be targeting on this trade? We already know this being a strong low, we're not going to... There's a pretty good chance we bounce before we get to here, right? So where do you think like the next area is that you probably want to close the trade? Let me zoom in specifically on these candles here. I know it's probably like a little bit hard to give an exact level, but just try to give me like, you know, your best guesstimate.
Are you asking me where I think the next strong low is going to be, or?
No, like the place where you'd want to close the trade. So we know this is a strong low. So if we're in a trade coming down to here, we're probably going to be bouncing before we make it here. And I'm asking you, where do you think that will be based on this information?
So if we're starting to trade from here. If we're gonna bounce from here. You gotta walk me through it. I'm not seeing it.
No worries. It's not a big deal. Give me just 1 second here. I have people messaging me about joining this group, and I would like to include, as many people as I can. All right, so for me, if I know I have a strong low here, right here, this would be considered a poor low, and potentially a strong low here. I didn't want to give you all of the information, but so with that, like that information known, I would probably be looking at the body of these two candles right here for a place to close my trade, right? And so if we look to the right, we're expecting price to come through this poor low here, and then eventually bounce. And so if we're looking at this again, I don't even know exactly what happens, and right or wrong is completely irrelevant. And Romy, you know that, but just kind of speaking to everybody, we're not worried about being right or wrong. We're worried about just trying to take good A++ setups when we take a trade, right? And so when I'm looking at stop losses, like I really try to figure out like where might they bring price if they're really trying to stop me out. And in this instance, like my eye goes to this wick here. And if I'm looking at this wick, then I know I want my stop loss to be slightly above it. And then my eye also goes to the body of these candles right here, right? And so if I can be slightly above this, and I'm making at least $1 for every, I'm making $2 for every dollar I risk, then I can take the trade. In this instance, I would be making $5 for every dollar that I risk if I took this trade and it worked out in my favor, right? So we'll just run this forward really quick and just kind of see if it would have worked out. And I guess actually would be entering here. Sorry. Yeah, so right there. Actually, I want to back up. Actually, I want to go forward one candle. Oh, wait, so no, this was not our price target. We expect price to break through here. And actually, this is really good information that we want anyway. The massive bounce on this candle and the wick, which we'll talk about in a second. But now they hit our profit target, right? And now we can just like let this play out and just kind of see. Yeah, they dumped. But this is probably more news related with with everything that we have going on right now. But if you're taking this trade, we're basically risking 16.5 points to make 71.25. And for people that don't know ES, and actually while I'm thinking about it, what I'm teaching will apply to everything. It doesn't just apply to futures. Right now we're looking at a future, but this applies to stocks. It applies to options. It applies to futures. You can implement all of this information on basically anything that you're trading, cryptocurrency, whatever, doesn't matter, okay? So in this instance, we were risking, oh wait, that's not right. 16.5. Bro. We're risking $850 if we took one ES contract. If that's too much for some people, you can take ES micros, and risk less. And we were risking that to make $3,562.50. So this is really what you're looking to do over and over and over again. And, like Romy, sorry, I just completely lost my train of thought. Give me a second. Sorry. Well, I guess let me just go forward. Like the biggest thing. Oh, wait, and I'm doing this wrong because we're targeting here. So we were actually making more. We weren't aiming for that first target. It doesn't even matter though. You guys get the general gist of the idea. But what's more important for us to talk about is not being scared when, sorry, I'm just trying to delete this. When this happened. And it can be difficult to not be scared when, and actually it's even a bigger bounce than that. We bounced from there. So this is a 58-point candle, right? And if at any time in this trade I did what a lot of people do that they shouldn't do, is trail my stop loss, I would have got stopped out, right? But as long as I trust my levels, I trust my entry, I trust my stop loss, and I'm making good decisions on where to take profit, like there's a chance the trade goes against me, but I've literally had trades do something like this, like come all the way down and like come within 10 points of my take profit, end up bouncing, go negative, and then come down and hit my profit target. So if at any point in time I move my stop loss, I would have lost on that trade. And the biggest issue is basically when we're in a trade, if we're red on a trade and it completely goes against us, every single time we do that, our stop loss is going to get hit 100%, right? Like we're not moving our stop loss closer when we're red. So if we're not moving our stop loss closer and minimizing our risk, then we can't move our take profit lower when we're in profit to minimize our risk, right? And the reason being is if you're doing that, you're no longer doing one risk to reward as a minimum. And for anybody that does this, right? Like let's just say I even move my, my stop loss just down like this much. And, I'm almost at my profit target here. And it does this, whatever it was, 58-point bounce, stops me out, and then goes and hits my profit target like just a few minutes later. So now taking a trade like this, I'm basically doing one risk, one reward, because I got stopped out. Actually, it's worse than that because this isn't even 50%. Like if it was 50-50, this is one risk, one reward. But that's not where we would have got stopped out. We would have got stopped out at a ratio of 1.36 to 1. So, or actually it would be less than, sorry, it's the inverse of whatever this is. But, so in that instance, like we have to be like this insane trader where we have to be winning, like 50% of the time to be correct, or I mean, to be profitable, or even worse, like depending, on how bad we're moving our stop losses, we might even need to be 60% correct or 70%. And, like even the best traders, like myself and Shorty, we're probably closer to like a 80%, 70% win rate. And it's not like something that's easy to do. So when you're new, trying to achieve numbers like this is very difficult. So more likely than not, you're going to be losing on your trades. because you're moving your stop loss. And a lot of people think like the focus needs to be on figuring out where, where to find your entries, or just whatever. Like they're so focused on setups and things like that, and really the main focus needs to be on the mental aspect of trading. We're going to be talking about the mental aspect of trading a lot over the next probably 2 months. Tonight we're going to be doing kind of more of an overview where Romy's still like in a learning phase. We reviewed charts. As you guys probably saw, it's difficult for him to recognize, some of the key things, whatever entries, stop losses, poor highs, poor lows, so on and so forth. So like this is stuff that we still need to work on, but also, stuff that I'm sure a lot of people that are in the voice chat or even like watching on YouTube also need to work on as well. So we're going to be going backwards. Sorry, give me 1 second here. Sorry. Oh my gosh. Hopefully nobody else messages me about joining, because that's what I'm doing right now. But I don't want people to miss what we're covering right now. So let's get back to basics, right? So Romy, if I'm looking for my daily value area levels, how do I go about finding those?
Daily, I'll go to my 30-minute and then turn on my SVP.
Yep. And then really quickly, I'm going to interrupt. So on SVP, value area volume 68, row size 100. Under style, we want to check value area high, value area low, POC. Okay. And some people, this might be, new to you. Basically, we're going to mark our value area low, our value area high. Oh, wait, I'm doing it on the current session. Value area high, value area low, and POC of the previous day. And you're going to do this once a day. All right, so now how do I find my previous week value area?
Previous week?
Yep.
Go to 65 minutes.
Yep.
And then go to PVP. And then make sure we are on 1 week.
Perfect. And then once a week, you're going to want to go and chart. I've already done it, but this is my previous week value area low. This is my previous week POC. And this is my previous week value area high. So basically, like once a week after the session closes on Friday, you're going to want to go in and put in your levels for your weekly levels. And then from here, how do I find my monthly levels?
Go to your 4-hour chart.
Yep.
And then same thing, PVP.
Mm-hmm.
And then make sure you are on 12 or on 1 month.
Perfect. And all the settings are going to be the same. Value area volume 68, row size 100. Under style, check value area high, value area low, POC. Right. And then, so basically once a month, you would be going back and grabbing, I think this is March, yeah. So we would be going back and inputting our February. Why am I on February? Sorry. You would want to chart your March levels, which I haven't done yet. So let's do that really quick. Interesting. I have a line there randomly. I don't know what that line was. in my defense, I was sick, so I guess I forgot to chart my monthly levels. Okay. And then how do I find my yearly levels?
Go to your 1 day.
Mm-hmm.
And then go to settings, PvP, go to 12 months.
Perfect. And then again, same settings. That would give me my 2024 value area high, 2024 POC, 2024 value area low. And then just for the sake of, like here I have my 2023 levels charted. Just for argument's sake, like if you're on the daily using your session volume profile, you'll notice these profiles only go back so far, right? So these go back to January of 2025. If I wanted information prior to this, all I have to do is click replay and basically like click pretty much anywhere. And then it will give me my levels prior to that, right? So if you're looking for months or whatever that aren't being displayed, you can just use the replay feature and keep going backwards until the level or until the months that you're looking for are visible. You probably won't need to do that very often, but like right now, like for instance, we've sold off so much, like what if there's no levels close, and so you need to start looking for levels, like way further back to figure out where we might bounce. That would be like a situation where you might need to use that replay feature, and look backwards, right? So the only other thing that I want to add to this is if you're trading futures, when you're charting these levels, you'll have extended trading hours turned on. You want to make sure that this adjust for contract changes is turned off. If you're charting anything other than futures, so SPY, whatever, NVIDIA, Netflix, blah, 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 blah. Excuse me. You're going to turn off your extended trading hours and use regular trading hours. Okay? So that's the only distinction between futures and stocks. Is stocks you would be doing regular trading hours, futures you would be using extended trading hours. On something like Bitcoin, you would probably just use extended trading hours as well, since Bitcoin is traded 24 hours a day, 7 days a week. Okay. Sorry, bear with me for a second, everybody. Any questions, Romy?
No.
Okay. We're gonna really just like kind of cover the same stuff we talked about last night, Romy. I just really want it to be like nailed home and like on the forefront of your mind. And so I shared this in the group for everybody else, right? So if you go to the mentor sessions recording, I posted a little basically intro saying if you haven't read or if you don't understand market structure, read Getting Started in Technical Analysis. If you do understand market structure, then just skip to volume price or volume profile, complete guide to volume price analysis, and trading in the zone. You don't have to like try to rush through these things, but I would recommend reading them before you start trading. If you're getting started in technical analysis, don't try to memorize this book. Just read it enough that you have an understanding of the book. Okay. But we're gonna be taking some excerpts from Volume Profile right now. It's literally probably the best trading book ever written, at least in my opinion. And it's just packed full of information that's very, very, very good. So if we go to page 24, or sorry, actually like 25, strategy 1. I'm going to throw this in the chat. So if you guys want to follow along, you can download it and follow along with me. It's going into the mentor sessions recording chat, just so you guys know. So the first thing that they talk about is, as far as setups for trading, we're looking at support, broken becomes resistance, you enter short. And so this is what Romy like noticed when we were looking at ES earlier. I don't quite know how he saw it, but he was right. So if I turn off session volume profile, right here, I have potentially like a support resistance flip, where this was resistance. We broke through it a little bit, came back below resistance, broke above support, broke back through resistance. This is your entry short. So, like as traders, or me as a trader, I draw my lines, for my daily levels, my weekly levels, my monthly levels, my yearly levels. And I use them a lot. Oh, and I guess I'm glad I came back to this, because when we were looking at this, let me just do this really quick. The previous day value area low was like right here, roughly. I said one of these was a good trade and one was a bad trade, and our previous day value area high was right around here. Or I said both of them are good, but one was better than the other one, or whatever. And I never explained why one was better. The reason that one was better is this here is at our previous day value area high. And when we're at highs, we want to be thinking short, or we want to be thinking puts, right? Just as a general rule of thumb, that doesn't always, come to fruition. That's not always true, but it's not a bad rule to have. Like, hey, we're kind of, we've been running up and now we're at the top. We're at our previous day value area high. Probably shouldn't be trying to take calls higher here, unless I have some major indication to get into calls here, right? So the reason this was a better trade is we're looking to short or looking to get in puts at the top. The reason that this trade isn't as good is we're looking to short or get into puts at the previous day value area low. Not the best idea, like when you're a newer trader. Really, based on what we're looking at with, in Trader Dale's book here, support, broken, resistance, enter, right? And so if we look at this, and I can actually probably move this pretty significantly, at least this way. And so here we have like resistance, right? Sold off, resistance again, finally broke through, became support, Broke through a little bit, but then when we broke above it, became resistance again, support again. Or I mean, it became support again. Sorry, support again, and then we don't really touch it again until here, and we break through it. They kind of tried to bounce, but then we broke through, right? And then here is our retest of that support resistance flip, right? So resistance, resistance, resistance becomes support, 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 blah, 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 breakthrough, retest our support resistance flip level. And that's where you'd want to be considering puts or short, right? Again, the only thing that makes this not as good as this is that here we're at the lows and here we're at the highs. And again, if we're thinking short or puts, we kind of want to be at the highs, just as a general rule of thumb. I'm going to say a lot of things that are repetitive, and it's because they're important. Okay. All right. So let's go back to Trader Dale's really quickly. We're just going to kind of review really quickly. So this would be the inverse of that: resistance, 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 breakthrough, become support, enter long or open, or enter into calls, right? The next strategy is called open drive. And as I'm going through this, I really recommend people memorize basically page 20, like it's either 24 or 25 through about page 45. This is considered an open drive where we have like sideways price action, a big move either up or down. And then when we come back to that level, you would enter a trade in the same direction. Here's another example. This is the market open. We'll just say the New York session. I'm not really sure what session it is. But market open, big sell-off from there. Finally retest it. You would enter puts or enter short at that level. They're showing good setups where... do you need a minute, Romy, or are you okay?
Hang on one second.
Yeah.
Good.
Okay.
I'm good.
Okay, cool.
Sorry about that.
No, you're good. Okay. So, same thing. Sideways price action, big move up, come back, retest that level, enter into calls or enter long. I also like to point out when I'm talking about this, recognize this is a book, right? This is Trader Dale's book. And based on the information he's showing us, this looks like a failed trade to me. Like, it doesn't show me that he got stopped out. He doesn't say where his take profit level would have been. But to me, this looks like a failed trade. And like, think to yourself, why would somebody that's writing a trading book show a failed trade in their book? And you should be coming to, like, because we're playing probabilities, and, you know, like, even the best traders will say like 70%, 80% correct. That means 20% of the time they're wrong. 20% of the time they're losing trades, or 30% of the time they're losing trades, right? Wow, this whole people asking to join the group thing is getting a little out of control while I'm working here. Just so you know, Romy, I opened this up for like 24 hours. So after that, I'm going to be ignoring messages, people asking. But so, again, like, I think it's awesome that he's showing something like this in his book, because that's the reality of trading. Like, we're going to be wrong. Trades are going to go against us. And what's really important is how we react to trades going against us. This strategy, the AB equals CD, I don't really use it so much because it's very subjective, where you're just kind of choosing levels that you think are A, B, C, and possibly getting D. I don't really like to trade like that, but what I do is there's an indicator called AB equals CD, and if you turn this on, it tends to, like when you look at it in the moment, it looks like it's 100% accurate, but the reality is, like it might have shown up here, and then price sold off a little bit, and then came back up, and then it popped up again here, and then price sold off from there. Or same thing like this, it might have popped up here, and then price continued lower, and then it popped up again. So this is not 100% accurate, but it does keep reprinting. So when you're looking at it after the fact, it looks like it's working amazing, and it doesn't work as amazing as this looks, okay? But so if you're into this, read this, memorize this part on the AB equals CD. Me personally, I just don't use it, but there's nothing wrong with it. Again, I just don't like the subjectivity of it, of finding A, B, and C. Okay. This again is just your open drive. US market open, sell off, come back, retest, enter short. Daily open, daily/weekly highs and lows. So basically, like, this is our daily high. When price breaks through it, comes back and retest, you would enter long or enter into calls. Same thing, daily high, break above, finally get our retest, go. Daily low, same thing, break below, come back, retest, enter short. And again, it looks like he's showing a failed trade, right? This we're going to focus on a little bit more today because this is something that needs to be understood. This is our strong or weak highs and lows, right? So, a strong high, strong low, we're going to have like price coming up to a level on a strong high and then rejecting and creating like a pretty decent wick on that candle. This would be bearish, right? On bullish, we would have price come down to a level and bounce and leave a pretty good wick at the bottom, right? So this would be an example of a strong low. And the key with strong lows is, well, actually, I'll get into that in a second. But here's a strong high up here. And then this would be considered a weak high, right? Strong high indicating aggressive sellers. And what they're showing is if you're in a long and you see it coming up to where there's a strong high, you're going to want to close your position before that strong high, as they're probably not going to come back to that level. Weak high is the inverse. If you're in a position long and you're coming up to a weak high, you expect price to break above it and go higher and make a new higher high. Okay. This, my gosh, I'm trying to think of the word. This candle here is, oh my gosh, why can't I think? Well, it's a strong high, but it's also, it's called something else. It'll come to me in a minute. But what he's saying from there is when you see this and we sell off and we come back to that level, you would want to enter short. My gosh, I need somebody from freaking Shorty's Discord to tell me what this is. I don't know. I can't think of it. So this is a poor high here. And again, we would be expecting price to break through and go higher, right? Failed auctions really to me is just going to be like your poor highs and poor lows. He's explaining it a little bit different here. But you would want to understand this. And basically just the stock market is an auction where we have, like buyers and sellers. And when we get to a point like this, where we have no sellers, but we have buyers, that means that the auction was completed here at the bottom. If we have, sorry, I'm trying to look for a good example, like this here, where we have basically two candles at the same level. This would be a failed auction where we had buyers and sellers still present, but the buyers were being more aggressive and push price higher, right? So what we were talking about poor lows, like, so if we look at this as a poor low, when price comes to here, we expect price to break through it and go and make a new lower low, right? When we have a strong low, so like in this instance here, when price comes back to it, we expect a bounce. And a lot of times they will bounce before. So like if I do this, this was our initial bounce off of that strong low, right? And then they were able to come down to it and make like an equal low and bounce again from there. But this was our initial bounce, and it's pretty significant. Let's see, this is roughly 30 points, 32 points on ES, which is huge. When I have a strong low like this, I generally will close a trade like here as I'm coming to it, like basically the body of the candle, something like this. When I have a poor low, even though basically like, again, it depends on the trade and like how much of a move I've gotten, but we're expecting price to break below like this poor low right here. And so when I'm in a trade coming down to a poor low, a lot of times they'll just go a little bit below and clean up the auction, and then they'll kind of start bouncing. So me personally, I just kind of close it at an equal level to where my poor low is instead of trying to catch that tiny bit lower. Again, unless I have more information telling me that they're going to be going even lower than that, then I'll just kind of look to close it at an equal level. Excuse me. Sorry, everybody. Really getting a lot of messages, which is making this difficult. Okay. Oh, wait 1 second. Sorry. All right. Any questions so far, Romy?
No.
Okay.
I remember kind of going over a lot of this yesterday with you.
Yeah. Good. Okay. So, and basically, like, you can just find this stuff repeating over and over and over and over again. So we already talked about like this strong low here. This here is probably a poor low right there. This is a poor low here. This is definitely a poor low here. This is a strong low. But again, it's not 100% of the time. So this one got sliced through. This poor low, we went and made our new lower low, formed a new poor low, and then here we went through it, made a strong low, and this looks some kind of a news candle, but they were able to go lower on this poor low, yeah, this is a poor low. So we expect them to go lower on this poor low. You can just look at this repeating over and over again. This is our poor low, and we broke through it and went lower. This here is a strong low, and you can see we weren't able to come to it, and we bounced, right? But then the next time we come to it, we went and made a new lower low and ended up making another poor low. And from there, right now we got a nice run from there, right? So, I was talking with Romy about this last night. Basically, you don't have to go off of the levels that you have. But if we just move this again really quickly to here, when I'm looking for a trade, I really like to see a level be broken, have at least 3 5-minute candles below that level, come back and retest it, and then enter short. Or the inverse would be have my level be broken from below, 3 5-minute candles or more, closing above, retest, and enter long or enter calls. Okay. There is a key that I like to look for, which is I really like it when my levels are broken with kind of like gusto, I guess would be the best word that I can think of to use. So I'm kind of trying to look for an example here for you guys. I'll just use this right here. Oh, excuse me. Ugh. So let's just say this here, we broke below, came back up above. I mean, actually, technically, based on where I drew this line, like this could have been a short or could have been puts, but I'm specifically looking at this here, and this isn't a level that I would be trying to short because we have candles like going all through this. But what I'm trying to show is when I finally break a level, excuse me, sorry everybody, I want to see price just like go, right? I don't want to see like candles that like wick through like this and then basically immediately go back inside. Sorry everybody, I'm dying. And then wick back down below and then go back above, and then wick back below and then go back above, and so on and so forth. What I'm looking for is for it to break and not keep touching that level, right? So the 3 candles that I'm looking for closing above or below my level, I want them to be clean like this, where they're not coming back down and wicking down and touching the level. I want 3 nice candles like this one, 1, 2, 3, where we're completely above our level or completely below our level. And then our retest, we're looking for exactly this, where it just comes and taps it and then goes, right? It might seem like unrealistic, but this just happens all the time on different, indices, on different charts. And if you're patient and you just wait for these good quality setups, sorry, 1 second. You're going to do really well as a trader. The difficult stuff is being patient, and using, proper psychology, and not tilting when you lose a trade. So let's see. You have any questions, Romy?
No.
You
So
still good to go?
so you're gonna take so you would take a long on this. So
Well,
you got
this is fictitious, but yes.
okay. So you would go three clean candles out, comes back down. You get your support, and then you would run long.
Yes.
Okay. And then on the other side of it, we break through three candles outside.
Mm-hmm.
Now we tap through our resistance.
It's fine. We don't
Would you
know that,
would you
right?
would you
So
go short?
this, yes, 100%.
Okay.
So, like we don't know what happens from here forward. When our level gets tapped and we enter the trade, we don't know what's going to happen afterwards, right? So, what we're looking at is we got to figure out like where would we want to stop out, and where are we looking to take profit? Am I making at least $2 for every dollar that I risk? The answer is yes. And then from there, you've just got to let it play out. And if you get stopped out, you get stopped out. But in this case, it worked out in our favor,
Mhm.
right?
Yep.
And so this part, are you still good to go, Romy, or are you done for the night? It's been an hour.
What time you think we're gonna run to?
I really don't care. I can keep talking. But if you're done, like me and you can be done, I'm going to talk with everybody else about some stuff that we've already covered that I know that like nothing to do with trading, more of like journaling your trades, one trade a day for 6 months, blah 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 blah, stuff like that.
Okay. Well, okay. Why don't you just do that then, and then that way, um, I'll just get a hold of you tomorrow. We'll figure
Yeah,
it out for
same
tomorrow then.
same time tomorrow.
Perfect.
Okay,
All right. Thank you, Drew. I appreciate you, man.
no worries. I'll see you this time tomorrow. Okay.
Okay. Take care.
All right. Have a good night. All right. So everybody else, this part's going to be really quick, but and I don't know. To me, it almost feels like we didn't cover very much tonight. But at the same time, like, I don't want to give you guys like information overload. I'd like to keep these sessions like kind of shorter, clear and concise. And, that way you guys can review it, whatever, really like learn what we're talking about. And then try to apply it, the next day when you're trading, charting, whatever. I will say, like, I like to show a live example for this. So if we go to NQ, and I'm always going to go to this trade because it's one that I talk about often. And so I have it like so planted in my mind that it's really easy for me to teach off of it. What are these lines? So random. February 18th, I think, I want to say. So let's just hit replay. Bro. We'll hit replay to right here. Oh, wait, right now I probably have way too much information. Pretty pretty sure this is it. Doesn't seem right. Oh, this is it here. It's got to be. I don't know. Weird. No, it was the overnight session. It's not there. Is this it? There it is. Okay, sorry everybody. So tonight, I love to show this trade because I'm able to cover a lot of information with just this one setup, right? So there's a lot of information here that we can kind of dissect. And should make sense to everybody just based on what we're talking about tonight. And actually, sorry, really quick, I have another DM. So we've been talking about support resistance flips, right? We've been talking about poor highs and poor lows. So like, for example, this here is a poor high, right? And basically just means we have a bunch of wicks kind of coming to the same level, and then they sell off from there. And the next time we come to here, we break above like we would expect, right? This here, strong high. We're not really zoomed in, so it might be a little bit harder to see. It might be a poor high. It's kind of questionable, right? But kind of the next time we come to here, we expect price to reject, right? And I was talking about this live today on my YouTube. Like, if we look at ES, I was saying, I don't know why this ES chart doesn't have the 2024 value high on it. Oh, well. I was telling people, if we look at ES, there's... Oh, it's going to give me the wrong chart. Our 2024 value area low. Dude, why do I have no drawings? Okay. Interesting. Well, right now I can't see it because I'm on replay mode, but we bounced from it here, right? And then somewhere over here, we came back to it and bounced again. And every time we've tapped it, we're making strong lows. So basically, the next time we come to this 2024 value area low, I'm expecting one more bounce. But I'm really hoping that they kind of make a weak low, or a poor low, sorry, at our 2024 value area low, and then they give us their bounce, and then they do something like this. So with that said, if we go back over to this NQ chart, again, we're looking poor highs, poor lows, strong highs, strong lows. And so here, poor high, break above, go higher. This acts as, so initially this is resistance, turn to support, 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 break through, becomes resistance after we break through it again, resistance here. And then this is kind of what you want to see. We broke through it with gusto. And as we got up to here, this is something we'll talk about more in the future, but I'm just going to point it out for now. As we're making new highs, our volume is decreasing. This is considered a volume anomaly where price is going higher, volume is going lower, which generally indicates that price is going to reverse and come back the other direction, right? So in this instance, like right here, 10:55, I happen to sit down at my computer, look at this, and I'm like, holy shit, this is going to be beautiful. I didn't have a line here, but I recognized, support, resistance, resistance. So then I started figuring out where I could draw a line, and I'm like, yeah, this is a nice SR flip. We've broken through it with gusto, right? We didn't wick back down. We didn't come back down and touch this level. We have 3 5-minute candles closing above. So now all I need to enter long is a retest, right? And then if you look, here we have a poor high. So when price comes back to here, we would kind of expect it to go a little bit higher, right? The way that I traded this, and this is kind of what I told you guys, is I will kind of just target like equal to the poor high, knowing they're going to go higher. That way I'm getting out of my trade, into strength. I'm selling into strength. So obviously almost 11 o'clock at night, I'm getting ready to go to bed. I put it in order. The only thing I don't remember, which I could find out if I wanted to, was I don't remember exactly where my stop loss was, but we'll look at this like as a group and kind of, figure out where you would want to put your stop loss if you're targeting this level here. The first place my eyes go to is the bodies of these two candles here, right? Like if market makers are trying to stop me out, they're going to come to there and then they're going to go, right? And then my eyes also just kind of go like to the body and wicks of these candles here, right? So as long as I can put my stop loss below, either one or both of those levels, then I can take the trade, right? So that's where my eyes go for stop loss here and here. A lot of times market makers know like, hey, everybody's probably got their stop loss right there, because they recognize that there's, two bodies of candles that took off from there, or one sold down to there and then they bounced right at that level. And so people will be thinking like, oh, they're going to, like they'll come down and then they'll go kind of thing. Where my mind goes to, if they're really trying to stop me out, they're going to come below that and then they're going to go. So I need to have my stop loss below those levels, right? And I put in my order, entry, stop loss, take profit. And then I literally shut down my computer and I went to bed. And now we can play it forward. Now I have new information, right? They broke above this poor high and they went higher and they made another poor high. So technically with this new information, I could probably target, at least a little bit above this current poor high. Or if we're trading like the way that I talk about, I kind of like to, target the equal high of a poor high to get out of my trades. But so, again, I was already in bed when this happened. It doesn't even matter. It is what it is. We did all of this, came back, hit my entry. And this is just the beauty of support resistance flips. The low on this candle is 22,269 and 75 cents. My entry, I'm sorry, this is slightly off. My entry was 22,270. So I was red for one tick. For people that don't trade futures, it would be the equivalent of being, in the red by like, 10 cents or whatever, 5 cents on a $150 contract. I was literally red for a fraction of a second and then we bounced. Another thing that I like about showing this trade is if at any time I trailed my stop loss, I was done. So we get pretty close to my take profit, have that big selling candle down like we did on that trade earlier that we were looking at, and then finally go up, hit my first profit target, right? Or my profit target where I closed my trade. But then again, with this new information we have up here, if we were trading based off of that and targeting something like this or even this, we're getting almost 5-1 on our trade. Let this play out. So we actually went red. They came kind of close to stopping us out. And look where they bounced, right? So I was saying, like, the body of this candle here, I want to be below. Look how close they were. And you'll kind of notice, so this is resistance, resistance, resistance turned into support. So this here itself is another kind of SR flip, a smaller one. From there, they eventually, one day in the near future, and then I should mention this is the overnight session, and there is no theta decay on futures, right? So, again, trusting my levels. I mean, my trade was the trade that I actually took was the cleanest, right, out of all of the possibilities. But really key to recognize if you're trailing your stop loss at any point in this trade, you're no longer getting your whatever it is 3-1, 4-1, 5-1. You're gonna get stopped out, and then it's gonna go up and hit your profit target. And I'm sure that's happened to a lot of people in this chat a lot of times. And I promise you, the first time that you tell yourself, like, no fucking around, like, we have all of the information, let's just say, and you tell yourself, like, literally no screwing around, I'm targeting this level here for my take profit. This is my stop loss. I guarantee you, when you get filled and you're like really close to your profit target, and then it comes all the way down to red and then goes up a little bit, back into red, it goes all the way back up, back to almost back to break even, and then goes and hits your profit target. When you get to this point, you're going to have like the best feeling ever of like, fuck, like I trusted my levels. I committed to my trade. I committed to whatever it was, the 3 risk, 1 reward, 4 risk, 1 reward, and it worked, right? And then you should be saying to yourself, like, if I can do it this time, I can keep doing it, right? And the first time you finally commit to it and you make it happen, like, from that point forward, you should get like, okay, like this could end up bad. It could go against me. I could get stopped out. But if I just keep doing this consistently, and I bring something up for you guys to show you. Um, So if I'm doing, again, one risk, one reward, to break even, I have to be 50% correct. To make money, I have to be at least 60% correct. If I'm doing 1 to 2, the actual number on this is wrong. I need to be 34% correct to be break even, 35% to be making money. If I'm doing 1 to 3 risk to reward, I only have to be correct 30% of the time. 1 to 4, only have to be correct. It's going to be less than 30, but more than 20. But right in this range. And 1 to 5, you got to be right 20% of the time to make money. Once you figure this out, once you trust the math, excuse me, sorry everybody, and trade off of that, this is the game changer between being like a profitable trader and not being a profitable trader. There's a couple other pieces to the puzzle that you have to add in, but this is the biggest one, is accepting your risk, accepting how much profit you're going to make. So let's just do like a little fictitious trade based on actual levels on NQ. Let's just say on this trade, I took 5 MNQ. MNQ for every point is $2. So if I have 5, basically every point I'm going to be making or losing $10, right? So with that said, if we calculate this, we'll say I'm risking 10 points. So, again, it's 10 times 10, it's $100, right? I'm risking $100, and my potential profit would be is everybody in this chat, like, I mean, I know you guys can't directly answer me, but I'm more asking you to answer yourself. Like, are you all comfortable risking $100 to make $447? If the answer is no, that's okay. Sorry, 1 second, everybody. So if the answer is not yes, then you just size smaller. Instead of taking 5 MNQ, maybe you take 3, maybe you take 1, maybe you take 2. You have to figure out what you're comfortable risking. But for me as a trader, you tell me risk 100 to make 475. I'll take this trade every single day, all day, every day, no questions asked, like without even batting an eye. And if this happened, I wouldn't even be fazed by it, right? And really quickly, just to touch on something, I don't know that the dollar amount is important, but if I was to ask you guys, like, just on a day-to-day basis, like, let's say you're going to the grocery store, right? And you're spending $100, or you're going to a nice restaurant with your family and you're going to spend $100. Like, are you dying inside when that happens? Like, that you have to spend $100 at the grocery store, or spend $100 at a restaurant with your family? And I'm guessing the answer is probably no. But why are you dying when you're taking $100 loss on a trade? Right? And so if you really think about this, the issue isn't the $100 loss, right? What the issue is we're losing money, and at the same time that we're losing money, we're also being told we're wrong, right? And so, and when I say this, like some dudes might be like, oh no, that's not true. We're all egotistical beings, and a lot of us, our egos are very fragile. And when you tell your ego, hey, you're losing money and you're wrong at the same time, haha, fuck you, it really gets under our skin and makes us do some stupid shit. Like, when this happens, we'll start, like, we'll be like, well, no, like, I'm not wrong. It was definitely going higher. So let me get into a trade here now, long, and then price goes lower, right, and stops us out again. And we're like, no, 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 I'm right. It's going to go higher. And then it goes lower and stops us out again. And then when this happens, then you go, okay, fine. Like, if we're going to keep going lower, then I'm going to get into a put. And then at that point, price bounces and you get stopped out again. And the next thing you know, your account's blown. And it's all because you couldn't handle taking $100 loss and being told that you're wrong at the same time. And if you can walk into a restaurant and spend $100, or walk into a grocery store and spend $100 without like having a heart attack and like setting your wallet on fire, you should be able to take $100 loss on a trade without blowing your account, right? I don't want to get too long-winded in this, but again, we're going to be talking about risk management a ton, because that's actually like one of the most important things about trading. That's one of the most important aspects of trading. Until you get risk management down, you will never be a successful trader. And so you have to be okay with being up $300 and it going red on you and losing 100. Or maybe let's say you're not okay with those numbers, so you trade with a smaller size and you're up $50 and then you lose 25, right? But you, whatever the numbers are, you have to be okay with being very green and going all the way to getting stopped out. I'll just throw this out there right now. Anybody that's not comfortable with that, DM me. I'll send you a refund and you can go on your way, because I don't want to waste your time and I also don't want to waste my time. So, and when I say that, I'm not trying to be rude or anything like that, but this is really, really, really important. And if you're not willing to commit to doing this, you should really just forget about being a day trader and just stick to investing. Take whatever extra money you have every week or every month, throw it into an account, dollar cost average into something that you like. Diversify. Don't dollar cost average into just one thing. I'll throw out there as well, if you are okay with being green on a trade and having it go against you and getting stopped out, please stick around, but also become an investor. Take, whatever it is, even if it's $25, $50, $100 a month, buy some shares, buy some ETFs, buy some mutual funds. Before you know it, it'll be life-changing money. Okay. Again, don't want to beat a dead horse too much, but I'm going to talk less about the trading aspect right now and more on kind of just what I expect. And when I say what I expect, you guys are not like required to do anything that I say. Whoa. But this is what I like for the people that I am actually mentoring. So like Romy that was in the chat with us tonight, I expect this of him. And for me, with him, there's no ifs, ands, or buts about it. He's going to follow the rules. I would suggest you guys follow this, but you're not required to. For the next 6 months, and this might not apply to everybody because there might be people in the chat that have already done one trade a day for 6 months. We also have some people, I'm not going to name them, they're in the voice chat right now at this moment, but like we have some people that I know that take more than one trade a day that are successful traders. You're welcome to continue doing what you're doing. But if you're not profitable, or if you're new at trading, I highly suggest you follow what I'm saying. Do one trade a day for 6 months. You're going to journal every single trade that you take. There's a couple of ways to go about that. So like if you're wanting to trade futures, you can go and search in Google Excel futures trading log and then click on the shopping thing. And then basically just look through this and you'll find some that are pretty inexpensive. This is $2.64. You might end up, trying a few different ones before you find one that you like. But you're going to need an electronic trading journal where you're able to put in your information and it gives you like actual feedback about your trades. Okay. It looks like somebody's talking in the general chat. Okay. Alan, I don't know if you've got a minute. We're almost done. But if you've really got to go, take off, bro. So one trade a day, 6 months. Journal every single trade. There are some electronic journals. There's this one called Stonk Journal, which is completely free. They ask for donations, but you don't have to donate. But it would also be nice if you did. But this one's completely free. You can use it for futures, options, whatever. Oh, and then the one that I was just showing, like if you're an option trader, you would just change this to options. And then, so here's one here for $4.39, right? The journal that I use is called TradeZella. It's not cheap. But what's nice about TradeZilla is you can auto-import your trades directly from your broker. So I like it for that reason. Like the Stonks Journal, you have to manually type in everything. TradeZilla, you can just upload your whatever it is CVS file, and it'll automatically import your trades for you. But again, it's not cheap. Like if you're doing the premium, either $33 a month or $399 a year. If you're doing the basic, $24 a month or $288 a year. I know this is, for some people, like this might be too pricey, and I get that. So then go with one of the cheaper options, or go with one of the free, or go with like the free option like Stonks Journal. Okay. So again, just to recap, one trade a day for 6 months. Journal every single trade that you take. When you journal, you want to write down what you did right, what you did wrong, what you could have done better. And then the other thing is you kind of want to look, like I do on SPY every day with you guys. You want to look and see like, oh, if price comes to here, I want to be long. If price comes up here, I want to be short, or in puts or in calls, whatever, blah, 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 blah. And you want to figure out like all of the areas that you're wanting to take trades based on the information that you have on the next day. And I think that's it, everybody. Again, a lot of information. I would recommend you guys on Trader Dale's volume profile, basically start memorizing page 24 to about 46, I believe it is. And we're going to be meeting again tomorrow night, 10:30 p.m. Pacific Standard Time. And we'll get into some more information then. But for now, we'll call this, and then we'll see you guys tomorrow. And then I'll figure out times and days for next week, and I'll let you guys know as soon as I'm able to. I'll probably let you guys know before the weekend or sometime during the weekend, okay? Hopefully everybody's excited. I'm excited for you guys. I've been trying to figure out for a long time a way to do like a group mentorship And when this came to my mind, I was like, dude, this is perfect. Like, if I'm mentoring somebody and I could just have a bunch of people watch me, then that's like a win-win for everybody, you know? So, again, we'll call it here. Don't want to give too much information, but start studying volume profile, whatever the hell this is. Wow. It's like I'm trying to math right now. That was like a 90-point move in seconds. Oh, they just wanted some liquidity. Wow, they're angry. That's pretty crazy.